Welcome to Power Charting. I am your host, Bruce Fraser. We continue on with our chart reading the Wyckoff Way workshops. And we have with us today, again, very special guest, Bogomazov. Ramon, thank you so much for continuing this case study with us.
Absolutely, and as always, happy to be here.
And please go back, watch last week's show. Incredible episode on an actual trading case study that we did with Tesla. We're going to continue on today with another one, and it's just a way to really demonstrate how much great information there is within the charts themselves and how you can really nuance your skill sets to become just a really high level mastery trader. And with that, let's get started. So we are going to do a Wyckoff market discussion, April 5th, 3 p.m. We do these every week, but we're going to have an open session, and you are absolutely invited to attend. WyckoffAnalytics.com. Sign up, join us. We absolutely protect your information. So we just would love for you to be there and to learn more about how we basically look at all the markets, or all the major markets per se. And we have a great session every week. They're all a little different. Ramon, what are your thoughts?
Well, I just want to say one thing. First of all, it's a lot of fun. I mean, even last week we had such a great discussion. Bruce was on fire talking about different stages of the business cycle. There's so much valuable information that you get through those Wyckoff market discussion sessions. Not just this discussion about the market on the very technical level, short-term level, but also on the macro level. We concentrate a lot on the macro technical conditions, and sometimes also on the macroeconomic conditions as well. And I mean, Bruce has such a wealth of knowledge on that, so it's always fun to discuss those things. And I just want to also point your attention that we've been around. I mean, like, this program has been around since forever. We are actually very close to the episode 350, and those are weekly episodes. So you can imagine, guys, we've been doing this with Bruce for years and years and years, so check us out.
Certainly the highlight of my week, one of them, and it's just a great session for us and our Wyckoff community.
All right. Well, let's go to our Tesla case study number 4. So this was an actual trade, and this was actually a short trade. So let's go through the analysis of it. As we go into 2022, the bear market, we are looking for the stocks that have the following characteristics under the condition that the market actually turns biased to the downside. So we're looking for the stocks that are in the distributional structure. That's number one. Secondly, they are underperforming, so the relative strength is less. And then thirdly, we want to see some kind of local pattern, right? So in Wyckoff terms, we would be talking about phase C, phase D type of pattern. So this could be your attempt to upthrust into the upthrust of the distribution, which is going to be a higher high, and then the reversal out of that. Or we're looking for some kind of lower high, which we would label a last point of supply. Now here on this chart, which was tweeted out back then in April of 2022, I'm showing the analog of Apple from 2008. And my whole premise here is that this awfully looks similar to what we're experiencing in Tesla. And as we go through all of these points, we start with point number 1, which is basically the buy-in climax. And we're seeing how little by little, all of the waves down are expanding. And what's interesting about this expansion to the downside is that with each wave, we have some kind of sign of weakness as the price undercuts the support every time. And then the last one has this very, very prolific attempt to go down and very prolific recovery, followed by the test, and then by the most aggressive rally in this formation to the lower high into the down sloping structure. So when we look at Tesla, we see basically the same pattern. And of course, the main idea here is, why does this happen? Why does even like this bar looks the same? Why does this test looks the same? Why does this rally looks the same? Why does it go to the lower high like it did with Apple? And the answer here is that under the certain conditions, behavior of people is going to be the same, and they're going to repeat the same type of trading decisions and behaviors as we have seen before. And the reason why is because human nature doesn't change mostly. And with this analog, we are thinking that we're going to have the same type of effect to the downside as we have had in Apple in 2008. And Bruce, before we start discussing the points of entry here, what are your thoughts on this analog? And just generally, in terms of the distributional bias, what do you see here for Tesla in 2021, 2022?
Well, the idea of the analog is really central to the whole notion of technical analysis, because when you look at patterns or structures or setups, and look for commonality between them, that is in a way looking for analogs, maybe between an idealized structure and currently the one that you're looking at or potentially trading. That's what technical analysis is all about. But there's a whole nother step in Wyckoff that is so nuanced and so special, because note that and Roman really pointed this out, that these declines after the final upward move are not only more volatile and going to lower lows, but they are progressively longer in duration and increasing in volatility. And so this is a condition that very much is associated with distribution. And so the idea here with this decline is that immediately a Wyckoffian would go to, this stock is distributing itself. The rallies are short, abrupt, and the declines are long and increasing volatility with a pretty high and increasing volume. So those are natural attributes to a distributional type structure. And so I just want to point that out, Ramon, that this and distribution can show up in many varied ways. And the fact that this distribution is happening with lower highs throughout, an inability to be able to upthrust to a higher high while this is all going on, is even further evidence of internal weakness in the way the stock is trading. Ramon?
Yeah, and one of the things here, a small nuance between these two analogs, is actually one discrepancy on the way down. As the price goes down, we've seen that Apple actually was way, way weaker in 2008 than Tesla in 2021 and 22. And we're seeing how this low right here originates the idea of the capitulation bar that breaks through that important level on the gap, on the increased spread, on the very big volume signature. Here in Tesla, the same low is relatively close to the sign of weakness at point number 6. So we are actually thinking that this first leg down might not be as aggressive by the character that Apple exhibited in 2008. So our assumption here is that we're probably targeting this zone between 700 and 650 as our target zone for some kind of intermediate stop in action. And we're thinking that this would be our trade, or maybe just a slight sign of weakness into 600. So right here, what we would be looking for our exit characteristics is increasing the volume signature, which is going to be extremely important, and also behavior of the price. Would we have some kind of climactic behavior, or maybe like diminished selling into the stop in action? And that would be the clue for us to exit. Now, this position was, for me, an actual position, and I bought directional puts, meaning that I'm shorting Tesla. And this was a swing trade intention behind this trade. So with that, my strike is I don't even remember where it was. I think it was slightly below 900, maybe like 850 or something like this. And the expiration was, if I recall correctly, like around 3 months expiration. So the first point of entry was on this red bar after the last, what I would consider a local climax bar. You often gonna have the rallies that are going like steadily, that then they're gonna have the last test and then the last attempt to go up that climactic bar. So we're coming in right after that bar. So I think that the point of entry is almost perfect. I mean, like obviously I'm nitpicking here that it wasn't open on the way up, and which is very important for any type of options trading. You want to open your position on the last counter bar to your bias, and that's just because of the premium collapse. And then the second position was open. So we're here on the small up bars. There was announcement earnings, and that was kind of like a little bit ominous for a second bar, that black bar, where you have the open with the gap, but the close of that bar was pretty decent. We're coming back into the local structure, and that was a very important add-on. So I wanted to make sure that this trade will unfold with the good size. Okay, and now let's look at the continuation of this trade. So here is this trade right here. Here is our points of entry. And as we go down, again, our target is between and this is a different scale already here because of the split. But this was our target right here, somewhere in this area. So we're starting to look for the points of exit that are going to be associated, as I said, with the increase in the volume signature and with some kind of stop in action on the price side. And both of these bars right here were perfect points of exit. I actually did 3 exits here and scaled out 3 times. So what's important to me, especially with options trading, is to see this increase in volume, which basically increases volatility, and especially when we go down, and that increases the premium. So again, you want to be extremely efficient on the exit, especially with options, and get out not on the reversal or on the counter bar to the trend, but actually on the bar that produces that fear and increases volatility and therefore increases the puts premium, and you extract the efficiency that way. The third entry exit was more of kind of like, I'm done with this trade and in anticipation that we're going to have a more meaningful rally. And I thought, Bruce, that that was actually a perfect trade.
It's a beautiful trade. And the points here and here are really climactic events in a local downtrend. Preliminary support, you'll remember this from last week's show, preliminary support, and then a climax, selling climax, and an automatic rally. And then this sets up a trading range condition. And in fact, this becomes what we call a hinge or a pivot. And it does produce a rally of sorts out of this area, maybe a swing trading rally. But this is a larger redistribution type structure that comes into play later on. But again, cause and effect. So a cause is built, and Rahman is picking the very best exit points in the climactic decline of that drop off of that point of entry.
Then the trade number 2 here, and all of these are actual trades, is something that I definitely kind of like when I sleep, I remember this trade, you know, like, and to me, this is extremely inefficient. And I'm thinking like, what is going on here in September, December of 2022? I'm just distracted a lot. I love trading Tesla. I think Tesla is the Apple of like, you know, the 2010 type of stock where there is a lot of participation, there is a lot of movement. You could extract the money easily. It's almost like the ATM. You come to ATM, you take the money out. And that's one of the beliefs that I have actually about the market, guys. You know, like I treat the market as ATM, you know, like if you need the money, go there, produce the trade, take the money, and so on and so forth. It's extremely important to have your own individual set of beliefs about the market, trading, and yourself, to get to a very, very high level where the confidence is very high that you could do this stuff. And obviously, technical skill is also immensely important. If you don't have the technical skill, don't come to me with your mental issues around trading, because those are not going to work if you don't know what you're seeing, if you don't know how to deduce what you're seeing, and so on and so forth. Well, this is just a side note. My disappointment in this trade is that I'm not participating as it goes down, even though we are in the redistributional structure here. So again, I'm just utterly distracted by something else. I'm getting in later on, and it seems like I'm doing everything correctly here. I'm identifying a local redistributional structure, which is smaller after a major sign of weakness, and we're seeing how that sign of weakness shows some lows below the intermediate selling climax here to the left. So everything seems to be correct, but I just feel that there is not enough move on the increase of the supply, and I'm just basically getting out right here in anticipation that we're going to consolidate again, which is the correct call. We're still going into some kind of secondary distribution again here, but the mistake, the mental mistake, is not to follow the stock, and again, just doing something else, probably with the company or something like that, and being distracted and not taking probably the best trade to the downside that we have. Why the best? Well, because look at the character of this, compare it to this, and compare it to this trade right here, or compare it to this movement, where you're seeing that this is the final climactic round to the downside that is going to have the speed, velocity, momentum, increase of volume signature premium would increase here dramatically. And the only thing that we can do is just to look as it goes down and start planning the next trade. And the planning of the next trade starts with the stop in action and some kind of testing. Bruce?
Yeah, the looking at this area right here, you can see, I'm not going to draw very straight lines, but this is redistribution. And then you have an upthrusting action occurring after this peak right here. And then right off of that, you're starting to get a tremendous volatility in the decline. This is just a classic place. Sometimes you can really see these by going into intraday charts, 60 minute, 30 minutes, something like that. And then here you get the same kind of thing, but it's even weaker because it cannot upthrust, and it rallies up to the area of resistance. This is a secondary test. This is effectively a secondary test, and then down it goes and starts to show weakness again. So these are two really good trading structures, I think, Roman, for in the context of the much bigger decline. And so this is just a great example, I believe.
Yeah, and so as we said, the next kind of like issue that we have to go through is to identify the area of the stop in action. And you could be approximate about this. You don't have to be extremely precise. I mean, you could have said like, this is the last stop in action. Then you could have said, this is the stop in action as well. And this is the stop in action. And you're seeing enough volume signature. The key here for me identifying that this was the low was the volume. It's not even the price, even though you could see that the climactic character of the decline of the last 6 bars is definitely there. And you see an attempts to go down on both of the bars that are trying to break the structure to the downside. And there is no result to the downside. Diminished result, shortening of the thrust, climactic run, extreme volume signature. What's not to like here in terms of identification of the stop in action and the selling climax? And then you start recognizing, wow, we are actually in an extreme oversold condition. Look at the extension of the price below the moving average. You could do the same with the relative strength. So in combination, all of these factors, it's just basically telling you that I am stopping at the selling climax, but I'm also oversold. And from the oversold condition, I am going to have the rally that's going to be extremely aggressive. And that was the beauty of the next trade, where we're picking it up at the test after the local change of behavior. And our expectation is that we're going to go into the previous value zone and this is our target. So a directional buy call. We are buying calls here, and we are also changing the strike to a much shorter expiration in anticipation that aggression will materialize in the lower duration for this trade. And I think that was a really good call, Bruce. I know that you had this trade here as well.
Yeah, and very much similar, but I just bought the stock, and the thing that you can see here, and you could really go into the intraday and identify an accumulation swing trading structure in here, and it's beautiful. So there's a selling climax, a test of that selling climax here. That's a little secondary test. All the attributes of Wyckoff accumulation. And the other thing that was happening here, this was year-end tax loss selling that was occurring all the way down here. And the tax loss selling by not only by individuals, large owners and institutions, as they were just getting the stock off their sheets because it had been performing so badly, that often produces a tremendous bounce as you go into the new year, because so much selling got accelerated into the old year. And so this was just a terrific run, and I believe I was in just like right in here, and then out just above 200. And so that was a swing trading opportunity in that stock at that time, I think.
Then in terms of the exits, really quickly, so only because I'm trading options, my eye is catching this, so this is my first point of exit, and then the last one is right here. That was a really quick, sweet trade. There is really not a lot that you could say about the second point of exit, where we're seeing diminished momentum, and then kind of like the last exhaustion bar to the upside, which is climactic, into the area of the resistance by the price structure and the 200 moving average, and that was it.
Yeah, definitely diminishing thrust on the way up. This was sort of the excitement high in this buying climactic event, and then all of the subsequent bars had tails more or less, and also diminished spread and very high volume, which shows a lot of churn in here. So, and then if you look at this whole area, it has the attributes of a distributional type structure on a very local basis, very short term. It's not a big structure, but it shows that there is supply coming in, and there are sellers, large sellers over the market at this point for the moment. Maybe not long term, but for the moment.
All right, well, Bruce, I don't know what else to say here.
Yeah, these are just examples. We're showing these as case studies. This is how Wyckoff works in real-time analysis, and there's such a richness of important concepts that are available bar to bar in the structures, in the trends, and so on. And that's what Ramon teaches. That's what we talk about at Wyckoff Market Discussion. Ramon does this incredible tape reading class on Monday mornings, and it's just an incredible class to attend every week. And so there's just so much to learn and know in the Wyckoff method, and it really does lead, I think, to trading mastery. And with that, Ramon, I appreciate so much that you were here for these sessions, and I think that it was incredibly rich. There's so much to learn, and please, everyone, just pull up your charts and start looking for these characteristics, and eventually you're going to discover that you're seeing them, you're learning them. And with that, Ramon, any last words?
Well, we're looking forward to seeing you at the open session on April 5th for WMD. Bruce and I will be going through the markets, we'll be going through the selection of stocks and groups that we think are relevant right now in this moment. So you're all welcome, and looking for a great event.
Everyone, thank you so much for being here, and we'll see you at Wyckoff Market Discussion and next time on Power Charting. Thank you.